What is going on, everyone? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. Today is November 17th, 2020. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to be talking about the price action, the indices, and volatility. We're going to, as we always do, go under the hood and check out the sectors and style factors. Some trades that I took, including playing the bloated pig Neo for earnings. And then we'll wrap up with a couple tickers I'm watching and some options order flow. But before we jump in, quick risk disclaimer. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan. And last but not least, do not YOLO your account into any one of my trades. So with that being said, let's get it started. Today we had, in terms of the major indices, we had the S&P 500 down 0.54%. We had the Qs down 0.32%. IWM small caps up 0.47%, which were our big winner today. And we had the Dow Jones down 0.56%. So if we take a look at the ES, like we've been discussing in these videos, we had that big downdraft before the election. Everyone got super bearish. Then the world did not end as a result of the election, and everyone had to add all their risk back onto the table. And now we are really just consolidating in a tight range. But as you can see, we are trading above the monthly value area. We're trading above all the key moving averages, and we are really at this point struggling at that R1 pivot of around 3,640. So you can see, today was more chop on the tape, and we have been talking about this options expiration. There's a lot of back and forth moves, so this is pretty much what we expected for this week. We'll take a look next at the Qs. The Qs again look very similar, above all the key moving averages, above the monthly value area. The main difference between the Qs and the S&P 500 is that the Qs are not making new highs. So they are really consolidating. They're not leading the market anymore, which is very different. Really, since the major COVID bottom, the Qs have led the entire way. So while this is certainly not looking bearish, they are no longer leading the pack. Now we'll take a look at IWM, which has been the outperformer as of late. And you can see IWM, it is consolidating as well, but this one looks like it's, prepping to take out that R2 pivot at around 182.29. So like I said, above the monthly moving averages, above the monthly value area, this one is looking pretty bullish as well. And then we have the Dow Jones. Pretty interesting. The Dow Jones and the small caps have been moving in tandem for the past couple weeks. But today the Dow Jones is down slightly while the Russell is up. But again, it looks like a very similar chart, really just consolidating after a big move. And we'll see if it can make that next leg up to around 302. Now, next, if we take a look at volatility. So with the VIX, again, we don't really do some crazy technical analysis on the VIX, but it's always useful to see where it's trading in relation to the recent range. And as you can see, we are trading really since COVID. We had that massive run up in the VIX. And then, we'll drift, and then we'll have these little episodic, pops in the VIX. And as you can see, we are trading towards the low end of the recent range. The real question is whether we are going to eventually take out this big gap in the VIX over here and really move back into our pre-COVID range. So that is definitely something to watch out for. But as of right now, just trading at the low end of the recent range. So now let's take a look under the hood at some of these sectors and subsectors. I created a little PowerPoint for you guys. That way it's easier for you to see the content. So we'll take a look at these sectors. So as you can see, we still have like energy, the regional banks, European financials leading the market. And you can see while we did have a down tape, energy was up. The regional banks took a small break, down 0.39%. Those European financials just will not stay down. They were up 0.42% today. And look at these monthly performances. Those three are up, about 20% each. So those are massive moves. And then you can see, towards the bottom of the list, still we have the innovative tech ETF, we have software stocks, and we have the gold miners, which are by far the worst performer out of everything, down 5.2% this month. So really no breaks for the gold miners. In terms of these style factors, it again supports this narrative about a rotation from growth to value. We have high beta, cyclicals, and international value all positive for the day, and the laggards have been growth, international momentum, and domestic momentum. So in terms of my trades for the day, like I've been saying in these videos, in terms of OPEX week, I really want to clean up my portfolio, and I'm only willing to take a shot on something if it looks pretty compelling. Roku is one of my favorite stocks in the market. I do have a core long position in Roku, and I did see some very interesting price action in it today. So we'll take a look at the chart over here. Pull up Roku. This one's kind of funny. I bought the November 27th calls, and I bought them slightly out of the money at a 242 strike. And you can see it looks like this kind of was like a bit of a fake breakout right here. I bought them somewhere around like the 240 area, and you can see that we did fade throughout the day. But what I think is so interesting about Roku is it's forming, it had a really nice run up, and now it's been consolidating for about a month. And you can see, we're getting pretty tight in that consolidation. We tried to break out and ended up failing. Now we're taking a second try, and it looks like we are, we're trading above the monthly value area. It looks like we are angling towards a potential run at the 266 level. So for that reason, I took a shot on this one. If it breaks below the monthly value area high, that's where I'll know, maybe I should take this one off. But we'll see. In terms of exposure to the markets, I do want to have at least some flyers out there just in case we continue to move to the upside. So we'll see what happens with Roku. As I always say, we'll have to see what the river brings. So now next we have, the NEO trade. And this is one I've been talking about a lot lately. This stock has been very in play. So I have here playing the bloated pig into earnings. So I took a broken wing butterfly. I did a call butterfly for this one. And with these broken wing butterflies, you essentially have a profit zone. Basically what I'm doing is I'm taking in a 12-cent credit, and I'm saying, if we end up in my profit zone, I'm going to win the trade. This stock could fall all the way down to 0, and I would still collect my credit. Where I lose the trade is if NEO ended up going above, I believe it's like $56.12, and I would take a max loss at 59. But with NEO, this company already had a massive run into the print. So you can see here, let's see, NEO. Yeah, take a look at this. It's had a really nice parabolic run. And really since November, if you look at where the stock was October, this is October 29th. Stock was around $30 a share, and it moved all the way up, in a span of 2 weeks to 54. So it almost doubled in 2 weeks. So this is one where, this is where Citron came out with their short report. I did a little day trade of a short right there. But this one, the stock almost doubled in 2 weeks. So like, I saw there was a 15% implied move priced into the options. And this one just seemed like a great opportunity to sell some premium and really bet on non-movement. And sure enough, they did report a beat on their earnings, but it looks like they are, not really a big move after hours. Let's take a look at this one on the 5-minute chart. This one looks like my toss. It's just taking forever to load, which actually happens quite a bit. So let's see what's going on after hours. Yeah, there was a huge dip, right after the earnings were announced. But those dip buyers came in. These people, these NEO bulls, man, they love their NEO. So let's see. Yeah, this one not really moving all that much. Trading at around $45. My profit window, would be if it had a really nice move to the upside. But it looks like most likely I'm going to be keeping my 12-cent credit. So this one very interesting. Now we'll take a look. So that one was a little earnings trade. The DraftKings trade. This one, what a long and winding road here. I initiated this one on October 7th. I sold the 45 strike puts for $3.30. And this is one where I like selling these puts. Like in DraftKings, I have done the work looking at the fundamentals. I listen to every earnings call for this company. And thematically, I do like this one for the long term. So for names like that, where like you sort of understand the company and you're willing to take ownership of it, so I'm selling a put can work. So like for this one, I sold it on October 7th. And basically with this strategy, it's saying, hey, if the stock goes down to 45 bucks, I will buy, shares of the stock. If the stock moves up, I'll just keep the credit. But for this one, you can see I initiated the position here, and I was like, oh, okay, most likely DraftKings isn't even going to reach 45, so this is just like free premium here. But sure enough, it went all the way down to 35. So for this one, sometimes I like using the short put for that reason because, I don't mind holding the stock for the long term, and I have the time decay working in my favor. And what I see a lot of new traders do is, immediately once the stock drops, they'll be like, oh man, like this is an awesome dip. DraftKings at 56 bucks, it was just at 64. Like what a bargain. Like I'm going to buy, out of the money calls. But then sure enough, as time goes by, like where you just drifted much lower. So if you're buying out of the money calls on this down leg, most likely you're sitting on a zero. But by selling the put, I had some more longevity in the trade and I was able to stick with it. So I sold, 2 tranches of these. We had a really nice green candle, so I figured, let me just take off 1 tranche just in case we get some volatility or a fade, throughout the rest of the week. So I'm glad that one worked out. I had to stick with that one for a while to see the gain there. And then the other one was 10x Genomics. And this is just one I played, with common shares. I put this position on, I believe it was like in September I added it. I had already taken half the position off in early October. And like I said, I'm trying to clean up my portfolio a bit. 10x has had a really nice run. And it's not exactly leading the market anymore at this point. I do like this stock, but for that reason, just trying to clean things up. I was like, you know what, I'll take this one off and just take the gain here. Those are some of my trades for today. Let's talk about some of the things I'm watching moving forward. So this one, shout out to Trevor on the feed. Trevor is an absolute stud. He's really been with me since the beginning when I really didn't have any followers. And he's just a really cool guy. He asked if I could talk about this stock GoPro. So let's take a look at this one. Let's see. We're going to look. First, let's zoom out. We're going to look at the weekly. That way we have context for this one. Because this one, it's been a long and winding road for these GoPro bulls. So you can see GoPro peaked, and it looks like, what was this? Was this back in December? How long ago was this? Yeah, it looks like it peaked at around $100 a share, and it's gone all the way down to, single digits. Looks like it went all the way down to like 229. Oh my gosh. So this is definitely a recovery play. And in the grand scheme of things for this one, like you're probably just looking for a bounce. But this one, could have a nice move. So you can see where we breached the yearly value area. So in terms of the long term, we are in a bullish trend now. And then if we look, we zoom back into the daily chart, you can see this thing looks even better. So we put in, a nice long base for a couple months here during the summer. And then this thing really started moving to the upside. So you can see in early October, there was this really nice green candle. We based for about another month. And then we had another move up, post-election. And as part of this rotation to value. So you can see one thing to take note of is that, we had trouble moving beyond that R1 pivot at $8.25. We had a nice little dip here. And if you were accumulating while I was in this little basing period, that $8.25 level, that could be a good spot to take some profits. But this one certainly does look bullish. It's above all the key moving averages. And we'll see. This one definitely looks good. So I appreciate Trevor for bringing this one up. So I will definitely keep watching this one. So some other stocks that I'm watching. Etsy. This is one I was just having a conversation with here for the Fin. That's another Twitter account that you should definitely follow. Let's take a look at Etsy. This one definitely has a different look. One thing I noticed about Etsy is that, it tends to make a nice run, then it corrects, and then it bases. And then you can see here, same exact thing. Like it makes a nice run up, then it corrects, and then it bases. Nice run up, corrects, bases. Nice run up, and now it's correcting. And it looks like it could be starting to form a base here. So like I'm looking at these levels right here. And we'll see if it can break beyond that base. You never know. That could be the next leg up. So for this one, it might be prudent. And I might actually do this. Initiate a position when it's, while it's still in the base. Because everybody wants to chase it when it's going on the parabolic move. And then suddenly everybody loses interest while it's in the base. So this is definitely one I will continue to look at. Another one I want to keep looking at is the solar stocks. And like for some of these like stay-at-home themes, like say like a Peloton, everybody was buying Peloton because the story was so easy to understand. It was like, okay, during COVID, people are under lockdown, people can't go to the gym, therefore they're going to be buying exercise equipment. And that is such an easy story to grasp onto and to understand. But now think about this story post-COVID. It's like, okay, now people are going to be coming out of lockdown and they're now going to be able to go to the gym. So it's kind of like, it's just a less attractive story. Whereas the solar stocks, they were also strong during COVID, but the narrative really doesn't end here. Like we do have the Biden administration coming in. They are very pro clean energy. So this is one where the trend could really continue for the solar names. And as you can see, we had the really nice run up, and it's been, consolidating and basing for, a good, really since October. So a good month and a half of basing. You can see now we're trading above the point of control for the month. And I did initiate a position in TAN. I got some long January calls while we've been in this base. I'll probably add to those if we end up breaking out. So definitely, keep an eye on this space. It's definitely very interesting, and it doesn't look like it's over. And then VFF. This is one that is on a nice run. It's a Canadian cannabis company. And I'm seeing a lot of analysts are coming out with these really lofty price targets, like $20 targets. You can see this one, also, let's see, come on, work with me, Toss. This one had a nice long base here throughout the whole summer. Look at how tight this price action got here. And then we had a really nice breakout candle. So this is one where, does it look extended? Yeah, it definitely does. This is one, look at the volume on this move as well. This, to be honest, it could just be the beginning. So I definitely want to keep watching this one for the future. So last but not least, we will go through some of the options order flow for the day. Let's take a look at what went down. I do like using this options order flow really just to get context and see, where the big money is allocating their capital. So these are filtered for the $1 million and up orders. I can see it looks like some people are trying to fade the move in IWM, or maybe they're just hedging their IWM positions. But these are slightly out of the money, and they're for December. So that's pretty interesting. A lot of these value rotations end in failure, so it looks like these people are betting on some failure for the value rotation. Tesla, some Tesla calls going up. That was another interesting story today where Tesla is being added to the S&P 500. You can see it ended up being a sell the news event. And it really makes sense because, everyone had already known about Tesla moving into the S&P 500. People were buying it really in August in anticipation of being added. So it doesn't surprise me that, sure enough, on the news, really people are taking that as an opportunity to take some profits in the name. But this one, it is consolidating, so you can never really sleep on Tesla here. Now let's take a look at what else we found. We got some Apple, which is usually, there's usually some Apple activity and really like those FANG names. See this one plug. Okay, and Boeing, they continue to go after these Boeing calls into 2020. And so far, everyone that has bought these Boeing calls has been, getting paid. So we have Boeing. Yeah, another nice candle up. So this one, sure enough, looks like it's probably going to take out that 231 level it hit. Really when on the last time we tried to reopen. So that one's definitely interesting. Hats off to those guys. Let's see a plug. This is another pretty popular name. Oh, wow, this one's had a very nice move. What is this? Industrials, electrical equipment? Provides hydrogen fuel cell turnkey solutions. Okay, yeah, this one is really hot. It pulled back quite a bit, but had a nice green candle. Let's see what they're playing for. These guys, the plug order. Okay, this is a January order. It looks like it came in at $3.15. And this is the strike price is $3. What? So that is like, what the heck? Did I read that wrong? The strike is $3. So that is just like super deep in the money. That's essentially a stock replacement play. Oh, but that one's really interesting. I'll probably have to take a deeper look into that and see why they might have gone with that, like super, super deep in the money. But that is some of the options order flow for today. I will remind you guys, Cheddarflow is having a 40% off Black Friday sale. So if you're interested in trying out Cheddarflow, feel free to use my affiliate link. I'm going to include it in the description to this video. It's a good opportunity to take advantage of that sale. Like I always say, I do enjoy posting out the order flow for free, so feel no pressure to sign up. I will continue to do so. That being said, that about does it for this market recap video. I hope you guys all enjoy the rest of your week.